snipers, you have to see what's happening to the Bitcoin price this Monday, as a lot has developed over the last 24 hours. And for those that have been on the Discord, I've been here with you guys every single minute of this price action that has brought Bitcoin above 44,000 with a candle high of 44,500. We have a lot of charts to look at today, a lot of potential scenarios, and some trades that we are currently in, some new trades that we've taken here for Bitcoin. Might be some short positions that we've actually put in place. And let's just dive straight into the charts, because I think that that's going to give us an idea of where to start. First and foremost, in the macro, notice how the Heikin-Ashi candles on the weekly chart have flipped green. And this is a major change in trend that we haven't seen for quite some time. We've always had red weekly candles on the Heikin-Ashi. I hope I'm saying that right. And so this is a major puzzle piece for the macro, saying that we certainly could have potentially have bottomed out at 33,000 US dollars, exactly as we've been predicting here on the Snipers channel. And so that's for sure, because 33,000 at this point obviously is very far away. And that's no surprise. We were tracking traditional markets and the four-dimensional aspects of the market, and we saw many different stocks like Coinbase up 30% from their bottom. And so we were assuming Bitcoin was ready to do something similar. And so for those that have been tuned into the Snipers channel, you guys know that we took a trade at 35,450 to buy Bitcoin low risk. That just hit its third profit target today at 44,444. And what we decided to do was actually take two short positions in reaction to this today on Bitcoin and Ethereum. And remember, short positions, we want to stay in them for a very short amount of time. We don't want to stay in them for too long. So our short positions have already hit two profit targets. We didn't take the short positions assuming that in the macro we're going to see downside and even further lows. We took those short positions to take advantage of the euphoria and the fear of missing out that we were seeing today when Bitcoin was going towards 44,500. And so, you know, I've already taken some profits on that short position. I've actually even taken some profits off the table for my swing trade, still inside of the majority of the position. And I think that 50,000 is certainly on the table. I'm going to talk about exactly why. And there are a lot of different scenarios to watch today, but the main topic and the main point that I'd like to get across today is there is one specific level on the Bitcoin chart that is extremely important for us to conquer right now. And we kind of fast forwarded through in the last 24 hours through price action because, you know, I said getting above 41,950 was going to be the best case scenario. That would be extremely bullish. That would assume that 33,000 is completely off the table in the immediate short and medium term. And that's what happened. And so now we've got to speed up a little bit and catch up to where price action is. And so now what I really want you guys to pay attention to is this potential head and shoulder pattern, where in a head and shoulder pattern, when you come below the neckline and you break, there's a high chance you come up to test the neckline as resistance. If you break through that resistance, it invalidates the bearish pattern. But if you reject the resistance, it gives the pattern a little bit more fuel. And so notice here on the charts, if we were to look at the Bitcoin to US dollar pairing, and I'm going to talk about some other indicators in just a second, but on the Bitcoin to USDT pairing, we are currently right now, and this is why we took this short position, testing the neckline of this head and shoulder pattern. Now, on the Bitcoin CME charts, and remember why CME is so important right now, because our recent bottom for Bitcoin at 32,930 was actually the CME gap that was left open from June and July when we bottomed out at 29,000. We had a CME gap right there. And so this is extremely important to realize. And the neckline of this head and shoulder is actually a lot different. The neckline here takes Bitcoin to around the $48,000 level, the $49,000 to $50,000 level. So I think that we could see both of these play out. I think that we certainly are seeing a little bit of a slowdown right now because we're testing the spot price neckline of the head and shoulder pattern. But there's still potential. We could even test the Bitcoin CME chart neckline. And so that's why I've been saying in the macro, 49,700 where we have the 200-day and 100-day moving average on the spot price is really the most important level to assume that we could see price discovery for Bitcoin. But until we can move above 49,700, we have to assume that there's still a potential that we could see further downside or at least some sideways price action. And right now, the range that we're playing in has a resistance of 44,800, of course, because our candle high was 44,500, and a support of 41,950. And so if we don't break below 41,950, that's extremely positive. We could even assume that on the smaller time frames, like the 6 hour, that we have a potential cup and handle forming. I know a lot of the people on the Discord have been talking about cup and handle formations on many different charts right now, but as long as we hold 41,950, we stay bullish. And if we can cross above 44,800, now we're invalidating the head and shoulder on the spot price. And I think the spot price and the spot chart is a lot more important than the CME chart. Even though we're starting to fill CME gaps, I think that the reason for that is because people forgot about CME gaps for quite some time because we haven't been filling CME gaps. And so Bitcoin decided, let's go to 32,930 where there's a CME gap and bottom out there. Not a surprise for those that have been tuned into the channel because we predicted 33,000 to be the short-term and immediate-term bottom before we even crossed below 50,000. That was because we took the two highs, the initial high at 64,000, the higher high at 69,000, and we drew out the channel and we predicted that we were only going to come down to the support of this channel, and that was at 33,000 US dollars. For those that were watching my live stream, and when we were crossing below 49,700, I kept stressing that 33,000 was the max amount of downside that we were going to potentially see. So right now we know the range that we're playing in. We know the confirmations we're looking for, and that's going to be 41,950 as the major support, 44,800 as a major resistance. And another reason we took the short position is if we look at daily on-chain exchange flow today, we had $17 million in USDT leave exchanges, but then we had $130 million in Bitcoin inter exchanges. And so we saw the opposite of what we've been seeing over the last few days, which has been Bitcoin and Ethereum leaving exchanges and US dollars coming on exchanges. And then we saw the pump, and then today we saw US dollars leave exchanges and Bitcoin come onto exchanges. So that was a little bit of concern for me, seeing that on-chain metric, and that's another reason we took that quick short position, is just to take advantage of some short-term volatility. And here in the Cypress channel, we follow the institutional money. So institutions love to enter into areas that retail is not even aware of, and that's what we follow. And then retail follows, right? And that's what we're seeing right now, I think, is retail fear of missing out and retail purchases. And that's actually clearly defined and shown on the 6 hour chart, which is the institutional time frame that we monitor here on the Snipers channel. By the way, smash the like button for the YouTube algorithm if you guys love the 6 hour chart. We're the only channel, I think, that covers the 6 hours as much as we do. And remember, that's how we predicted the bottom recently, because we saw the first amount of institutional volume come in below 34,788. That was my initial indicator that we had bottomed out. And then we had only seen more institutional volume come in below 38,000, but we haven't seen institutional volume come in since. All of the price action that we've seen above 38,000 has sort of been retail volume. And so that's totally fine to see. Question is, are we going to be rejecting the neckline here in the immediate short term at 44,800? Or if we break above it, are we going to be moving towards 49,700 to test the CME neckline? If we get above 49,700, now we're talking about potential price discovery for Bitcoin. And so we're not going to have to wait too long for that. And that's another thing here on the Cypress channel that we love to do, is to give you guys the best price for the earliest confirmation. And so right now, the earliest confirmation of further downside is 41,950. And the earliest confirmation of further upside is going to be 44,800. And so these are very important things to keep in mind. And then I do want to cover this chart right here. Oh, by the way, for those that are inside of our swing trade, our last target's 48,888. The reason that's in place is because I believe that in the immediate short term, it isn't a bad idea to take some profits off the table if you did enter into positions at 35,000. For those in the Discord, you know we entered those positions. If you're not in the Discord, we just opened it back up. Link is in the description below. So I'd love to hear you guys' thoughts. First and foremost, in the comments below, do you guys think that the CME chart neckline around 50,000 is more important than the spot price neckline? Or do you think that the spot price neckline is currently being tested right now? Actually, some people are even saying that we've already broke above the neckline, but I would like to just kind of draw out this head and shoulder pattern in front of you guys to show you why I don't think we've breached beyond this neckline so far. And then I'll actually show you the targets of this head and shoulder because they're very different on the CME chart versus the spot price. But if you take the left shoulder here, I would consider the price action here from July to September is the left shoulder, then the head at 69,000, of course, and then the recent wick down to 41,950, creating that right shoulder, because then we got back above 50,000. This is the head and shoulder that I'm watching. You can see TradingView has confirmed this as a head and shoulder pattern, and that's why right now I do not believe we have breached above this neckline. It seems like we are now testing it, which is why we took that short position, because for those that understand how to trade, in a head and shoulder pattern, you want to take a short on the retest of the neckline, because that's at least where you're going to get some short-term volatility. But if you break above it, it invalidates the pattern. Now, I know a lot of people might be asking, what is the target of this head and shoulder pattern? Well, if we were to take the head to the base of this head and shoulder, on the spot price, it's interesting because the target actually takes us just below the previous all-time high. And if we looked at this on the CME chart, I'm not going to do it since you're already seeing this right now on the spot chart, but because the neckline's a little bit higher, it actually keeps us above the previous all-time high. And so one thesis is, you know, ever since the 2012 cycle, and I've said this in the past and I've been wrong, but it's been ever since the 2012 cycle, Bitcoin has never breached an all-time high and then come back below it. But in 2012, we did break that rule. And so I know BitBoy had recently mentioned that Bitcoin loves its 85% corrections in its bear markets. And so that would assume Bitcoin comes down to even below its 200-week moving average right now, around 11,000 US dollars. And I think that that's something that might not be on the table in my opinion, because I don't think Bitcoin really will ever see much price action below the 200-week moving average unless there's an asteroid that hits Earth or some really big black swan event, right? But even during the black swan event in March of 2020, we only got down to that 200-week moving average, just a little bit below it, before we saw upside again. And so 200-week moving average right now sitting right around 19,000 to 20,000, where we have that previous all-time high. And that's also sort of where the target for the head and shoulder pattern is. And we also have that CME gap around 24,000 US dollars, right? So if we're starting to fill CME gaps, then we can also argue that 24,000 could potentially be filled. So what do you guys think about these CME gaps, the CME chart neckline versus the spot price neckline? Love to hear your thoughts in the comments below. Remember to smash the like button for the YouTube algorithm when it comes to the 4-dimensional revolving parts of this market, because I think that that's what's given us a pretty good edge against most analysts over here on the Snipers channel, especially over the last few weeks. Now, to wrap up talking about 4-dimensional aspects of the market, Ethereum to Bitcoin chart, which is a leading indicator for all other altcoins, still below a major resistance level. We know that there's potential weakness here since we broke out of a symmetrical triangle, then broke back down into it. And then we know as soon as Bitcoin moved up and saw that strength above 38,000, we saw weakness in altcoin dominance. And so this is something to note, because if altcoins are showing weakness in dominance while Bitcoin is moving up, that could be a potential sign of fear in the cryptocurrency market. Now, here are some important 4-dimensional revolving parts that we have to monitor this week. We're not seeing much price action today, but remember, the DXY testing this 100-day moving average is very important right now, because we're knocking on the door for a second time, makes the likelihood a lot higher that it breaks. If we break below this 100-day, very bullish for Bitcoin. If we bounce back above 95.885, the dollar value continues to strengthen. That's a very bearish puzzle piece. So let's monitor that. S&P 500 still sandwiched in between the 100 and 200-day moving average. Pretty important to follow this, because if we break below the 200-day, that's a bearish puzzle piece. We break above the 100-day, that's a bullish puzzle piece. And then international markets quite calm today, oil quite calm today. But one thing I'm monitoring is Coinbase chart, one of the most crypto-focused traditional market assets. And notice how we have finally broken and followed Bitcoin's trend of breaking through this major channel resistance that has held the Coinbase stock and a lot of the cryptos down since that top at 69,000 for Bitcoin. We finally saw the break above. And interestingly enough, we have yet to come test the 50-day moving average. But notice this, Coinbase, the 50-day is actually right by the 200 and 100-day. We still have a chance to get up there. And if we're assuming we're going to see further upside for Coinbase, that means Bitcoin can see further upside. Does that mean Bitcoin wants to breach above 44,800, get above the neckline, test 50,000 where we have the 200 and 100-day moving average, and then potentially test the Bitcoin CME chart neckline to keep the bulls and the bears on the edge? And then we have to potentially wait for 49,700 to break to get real bullishness in the market. That's all on the table. That's going to keep everyone on their toes. And I think that that's a very likely scenario, because remember what we talked about recently about the moving average convergence divergence, the MACD on the monthly chart, having its first crossover since the start of this bull rally. What did that do to Bitcoin back in the 2017-18 rally? Well, when we saw this MACD cross over, we saw a lot of sideways price action. And so could we assume that with this MACD crossover that we're seeing on the monthly chart, we could see a lot of sideways price action below 50,000, above 33,000, which was the short-term bottom that we called out on the dot? I think that that could be a very boring market over the next few months, but that could be an exciting market for altcoins if we don't break down from that major structural support that we're currently testing. And so you see how all of these revolving parts matter for the long term, the medium term, and the short term. And then to wrap up this video with another bullish puzzle piece that we've been monitoring, we go to the 3-day chart. Notice how we are getting a MACD crossover confirmed now. And this is huge because the last time this happened, we'll actually just pull up the chart here. It was when Bitcoin had saw a very strong impulse move, moving above 45,000 to see new all-time highs. We saw that MACD crossover in the 3-day, and then we also saw this happen when Bitcoin bottomed out around the $35,000 level when we initially saw that June-July correction. And so this is the third time now that we're seeing this MACD crossover. Are we going to be seeing further upside? I think 49,700 is going to be our first upside target if Bitcoin breaks above 44,800. 44,800 is going to be that first confirmation. That's going to really drill in the fact that 33,000 has been a short-term bottom. That validates the fact that we were correct here on the Cypress channel, that taking the higher high and making that channel, which channels are very subjective, but I thought that was a very smart idea, right? Take the two higher highs, the two highs, and see what the support is. So that could be the case. And then, of course, in the medium term, if we move sideways, what we really want to know is how are altcoins going to react? Are we going to be seeing further fear in the market? And so with this 3-day chart showing this crossover, it looks like Bitcoin does have a little bit more fuel left in the medium term. In the long term, the confirmation is above 49,700. If we get to 49,700, we're also testing the neckline of that head and shoulder pattern. If we reject 49,700, now we can make the case that Bitcoin can potentially come below 25,000. Because if we reject 49,700, and a rejection, we'll know is a rejection. If we come to 49,700, break below 44,800, that's a rejection. Or if we see the rejection now, we'll get a confirmation if we break from 41,950. And so I hope you guys are keeping up. If that was confusing, just subscribe to the channel. And the more you watch our videos, the more you understand what we're talking about. Because this is the only and the best 4-dimensional channel of covering all markets here on YouTube. And so remember to smash the like button for the YouTube algorithm if you guys support this content. I appreciate each and every one of you tuned into the channel. And so let's watch 44,800 and 41,950. That's the range that we're playing in the immediate short term. And until we move beyond that, we'll keep you guys updated. So thank you all for tuning in today. I'll see you guys next time. Snipers.